Welcome to our weekly Forex and Gold forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to caution that trading is a risky endeavor and not suitable for all investors. First market we're going to get to will be the Australian US dollar. Aussie US dollar held up very well last weekend. You can see you found support on that. It was a 3-point trend line. Found support there. That's a good trend line. Knocking against resistance right now. You know, we still like the upside there. Let me give you a peek at our RTT ratio. Here's the Aussie right here. You can see why we like it. The majority of your short-term patterns are up. If you trade the 5 through 25, the majority of those patterns are up. If you trade the 10 through 50, I like trading both those. You have the majority up still also. So we still like the Aussie. You're right at 25-day resistance right now. That 25-day pattern's holding right there. You see that orange line, and that's what's relevant right now. Really, the only time support or resistance are relevant is when you're right at it, and you're right there right now. And the 25-day pattern, that's a long time. In today's in today's markets, the traders, the dominant traders today have that short-term mentality. 25 days, that's going back over a month. That's a long time. So you're up against resistance here. So we'll see how that plays out. But if you could sneak above there, there's probably some more room on the upside in the Aussie. Next market we'll take a look at will be the dollar Swiss. This is an interesting chart. You did some technical damage as you did some of the other markets. We'll get to that. Look at, you took out that nice long trend line. Here's what I notice is right here, you couldn't make a lower low. You just barely made a higher low right there. We'll call that a double bottom. So 87 the figure, 87 even, which was the March low. You put in a double bottom there. Now you come out, you have just a 2-day blitzkrieg rally. You're above that high right there. That was a lower high. Now you have a higher high. So this is definitely something to watch. Let's break it down on the ratio, the Swissy. If you trade that 5 to 25 day pattern, if you trade those 3 patterns, and of course we trade with the majority of the 3, 2 out of 3 are up. Therefore, as a short-term trader, you're buying dips now. Granted, if you trade the 10 to 50, you're still selling rallies. So we would term this a counter trend rally, but it's coming to life. You have a green light to buy dips short-term. That's how markets start to turn. Now, overall, you could see these intermediate and long-term patterns, they're still down for sure. So, we're in no different place than we were here when you had a little bit of a hiccup. You reversed the short-term trades, but that intermediate and long-term trades, they ruled. But we'll have to see. It's interesting because I said this is the first time now you're having a rally that's not coming off a lower low. You're having a rally off technically just barely a higher low, but we would call that a double bottom for now and see how that pans out. Next market, the dollar index. I suspect you're going to see a very similar picture here. Yeah, there's a big double bottom. I was pointing this out to our students and our clients. This double bottom is so big, you can see this double bottom from outer space. Here you go out to a weekly chart, and there it is. Big double bottom. The first low is October of last year, and now we put in the second low. So big wide double bottom. That potentially could mean stability for a market. You go out to a monthly chart and you can see that the dollar index likes double bottoms. You had the massive double bottom in 08 was the first leg down, and then in 2011 it held again, and now we see the one on the weekly. So big double bottoms in place already. That speaks to stability potentially for this market. What I like is the ranges are getting bigger. You see your average true range just sunk to nothing. The average true range for the dollar index is less than 30 ticks. That's bad. It's neither bad nor good. It's just inactivity. But that came back to life. So the ranges are getting bigger. Volatility's picking up. You did a little bit of technical damage. Not much. You reversed both the 5 and the 10 simultaneously those last 2 days. And here you can see our dollar index, our ratio. Very similar to the Swiss. If you trade the 5 through 25, you're buying dips, but if you trade the 10 through 50, you're still selling rallies. That means that's a counter trend market for us. Next market will be the euro. Here you did a little bit more technical damage. To me, I think you're going to come down. You have a band of support here between the April low, which is a big level, you close below that on a monthly basis. That'd be a change of direction on the monthly chart. So the April low is big, and then we have, and that's at 36.75 or so, and then you have a risk tolerance level here at 36.40. So big band of support down below. I think that's where you're going now. You have a little bit of a more of an intermediate term RTT level here. This would be somewhat of a longer term. You have an intermediate term RTT level here. You parked below it. You closed just below it. However, you know, they're late on Friday. Sure, you close below it. We'll see if they can recover from that. If they don't recover early on in Sunday night, Monday's trade, then I think, you know, you're going to see the downside. You're going to see the April low, and you'll probably see it even go a little bit lower than that. Now, I'll pan out to a weekly chart. You take out these levels. See, those levels don't look so big now on a weekly chart. You can see the very clear pattern of higher lows, higher highs, higher low, higher high. The way to break that pattern is take out that April low. If you could take out this band of support down there, I don't think there's any doubt about it in my mind that you're going to see a major sea change reversal here for the euro. But you're still a ways from it away now. Here's the daily chart again. These are big levels coming up, and I think that's the market's going to test those. Here's our RTT ratio. Or the euro, there it is. You did. That's why I say you did some technical damage. You shifted that big 25-day pattern down. Here's what's really cool. Whether you trade the 5 through 25 as I do, or the 10 through 50, I trade them both. Either way, you're selling rallies in the euro, right? So you're going to see a lot more selling pressure on those rallies in the euro because of that. More and more traders will be working the short side. Here's the gold market. Gold's been confusing because it's been following the euro, then it follows the dollar. And gold, though, pretty weak right now. Pretty weak right now. Granted, you're sitting on a big support zone here. Market's just kind of going sideways, but it's not rallying. It didn't do anything with the big dollar strength we saw in the euro weakness. So gold, a little bit of a concern. If you're a longer-term trader, it's sitting on support. If you're a shorter-term trader, you'd be selling rallies right now. Here it is. Look at the majority of all those short-term patterns are down. It's just hanging on to that 5-day pattern. Wouldn't take much to shift that bearish. But you can see all these important, the 10, 25, 50, they're all down. So you're really, you know, this sell-off in March, you couldn't retrace enough of that to be significant. And then, of course, you pan out to the long term, the primary pattern, that's down too. So gold, disappointing. Disappointing if you're a gold bug. Well, we would see weakness near term. On the other hand, though, you got good support at 1262. So you're kind of in no man's land here. You don't really, I wouldn't mind selling rallies here, but more interested in buying the dip too, until at least you can clear that 1262 or so, 1260 area on the chart. Be a good one. Next market, the last market we're going to cover would be the dollar yen. You know, here's a similar market to the gold actually. Selling rallies shorter term makes sense, but you got to cover the dips pretty quick because you're sitting on big time support. Here the ratio is telling us sell the rallies, but at the same time, here's dollar yen. All the short term patterns are down, yet that long term secondary and that primary are still up. So dollar yen, I'd be more interested in buying from a longer term perspective, buying dips down in here. I think par is a big level to watch here. Really 101 to 100. If you like it at 100, you'll love it at par. Thanks again. My name's Jay Norris. Here I'll leave you with some thoughts my good friend and mentor Bill Williams taught me. All we need from the market is for it to provide us signals so we can take the appropriate action. Thank you so much, and we'll see you next time.